Hi everyone, welcome to the Still Trap Mind Show. I'm Jennifer Bolton with my co-host Andrew Carter. So last night we had an interesting restaurant experience. We'll share that.
You call it's like you go to a restaurant. It's on a kind of we'll say a not so good part of town off the highway.
Well,
It's like a shot in the dark kind of restaurant.
Well, I was looking for a secret restaurant. So I've been twice. It was an Indian restaurant. I've been with my Indian friends, and you go through these sliding doors. It's like a building that was like a grocery store, but it's not a grocery store anymore. But you go through, there's an Indian grocery store. Now someone local will tell us where it is from this description. Okay, it's an Indian grocery store, but then you go back through this other tunnel, and it's unfinished, and it's, concrete walls, and then it opens up to this really beautiful restaurant. It's got the most elaborate Indian menu I've seen with just...
But this was not the place that we found.
We didn't find it.
It was so secret we couldn't find it.
I couldn't find it because it had been 2 years since I went. We went in a wrong set of doors, and what did we find?
I mean, it was a good place.
Well, you're forgetting. First, we found a museum.
Oh, that's right. An international museum?
An international museum.
Very cool thing to stumble upon.
Yeah.
They had like every culture, and it was all donated. Very cool.
And it was closed. So they had the door open because they were having a meeting, and we stumbled in to this museum that we didn't know existed, that wasn't open, and we got a private tour.
Yeah, it was neat. We did that. Then we had the Indian food, and
but we never found the restaurant. We went to a different Indian restaurant because we never found the restaurant, and it was a really bad side of town. So there was this point where...
And it was dark out.
Yeah, it's like, is it safe to be at this Indian restaurant?
Like, is the food good enough to risk it?
We were the only people there to begin with.
I think the food was good enough to risk that side of town. The food, I got minor food poisoning. That wasn't worth it. So I had a little bit of food poisoning. It's daylight savings, so probably a little tired. But we're here. We're talking. I had flashbacks to college, daylight savings, talk about economics, but
it's
okay.
like, is it the spices or was it actually food poisoning? Because you got it really spicy.
Mm-hmm. It could have been both.
But we had a great time.
It was.
And then
awesome.
It was like people saw us sitting in there, and then people started coming in. Now I like to think that I had something to do with the people coming in, but it probably didn't.
Trailblazer.
Yeah,
trendsetter.
Maybe it was just a coincidence that we were the first people to sit down. There was nobody in there. But by the time we left, it was full of people. Mm-hmm. So it was fun. We had a really good time.
No, it was awesome.
The bathroom had a bidet.
That was the coolest. I've never seen a bathroom with a bidet in a restaurant. I think I might go back there just for the bidet.
Well, what's interesting is it's a part of town that's went in disrepair, but the restaurant we did find, which I think is the restaurant for everybody, and it's not the special restaurant. That's what I think. I think the special restaurant is in that building.
We're going to go back there.
I'm going to find that restaurant.
But before we talk about Indian food for hours and daylight savings and what our topic today, we got a really cool topic. I don't know if I want to call it cool, but a really interesting topic.
We're going to talk about inflation, and the average person doesn't understand it. I'm a lay person when it comes to these topics. Mm-hmm. So Andrew's helping me understand it. I'm reading articles about inflation for the first time and trying to understand it. And we had record inflation of 7%. We haven't had inflation like that in 30 years, since the 70s?
40 years.
I guess that's 40 years.
Early 80s, yeah. That's weird to say, 1980, 40 years ago.
Yeah.
We don't need to talk about
it was worse then.
It was double-digit inflation for several years.
13%, wasn't it? Something.
It hit 13% one year.
Yeah, and so this year, though, it was 7%, which is still really significant because what is it normally?
2.5% on average. I mean, that's what the Federal Reserve shoots for. They have the inflation target, and they want it to average 2% every year.
Okay, so we hear the term inflation thrown around a lot, but what is it and what causes it?
Yeah, so I guess the textbook definition, I mean, first off, everyone knows what it is.
I don't think so. I don't think you could take that for granted. That
you're right. Well, before last year, I wonder how many people knew what it was. It's been so long since we had it. Most people probably aren't familiar, but I guess the textbook definition, two things: prices going up, and your money is worth less. Now, economics, Warren Buffett likes to say it's like physics, where you can't do two things at once. So obviously, if prices are going up, your money is worth less. Inflation, and then the opposite side, deflation. If prices are going down, your money is worth more. Yeah, I'm just throwing that example out there to kind of
And
make
we're
you guys
going to do it.
understand.
We're going to do a deflation show too, because there are indications that we may actually in the future see a deflationary economy. So we're going to talk about
Right.
that too.
That's some of the good news we'll get to later. Everyone's worried about inflation. Long term, I think inflation's not a problem. I'm gonna come out and say that right now. It's this year, next several months, it's gonna be bad. The long term horizon, I don't think we have to worry about inflation. So that's something good that people can get a takeaway from.
I don't know.
I don't know. Some people aren't.
I don't
I'm
know.
putting it out there, but
Okay, so what is demand push?
so inflation is caused by two mechanisms. One of which is demand push. Basically, that just means, I mean, it is what it sounds like. There's more demand for a product. So basically, there's too many dollars chasing too few goods. So, I mean, like the weather is nice out. We're looking, I mean, we want to buy like a new grill, maybe a pellet grill, a Weber grill.
Oh, the green egg thing?
Mm-hmm.
Let's get one of those.
No, those are bomb. I mean, yeah, the
Okay.
fact we don't have a grill outside yet, I mean, I'm like kind
We'll
of
put it
ashamed
on the list.
But
It's on the list.
It's on the horizon
So,
soon. But
so there's not enough green egg grills per people wanting to buy them.
right, or I mean, could be ribeyes, case of beer. I mean, we want to have a cookout this summer, but oh, guess what? 10 other people want to have it, and there's only there's only 2 of those grills, and 10 people want one.
So-
But now 20 people want one.
So
all
now
of
a
a sudden.
retailer can charge more for the same grill because the demand's so high. People
Exactly.
are willing to pay more to get their grill.
Exactly, and this is what gets lost in the bigger picture. Everyone talks about. I mean, look, inflation is bad. I mean, I'm not saying it's it totally sucks, but for there to be inflation, there has to be demand. People have to have money. So, I mean, that's kind of the silver line you can look at is people are out buying stuff in large quantities. Unfortunately, there's kind of a negative side effect.
Well,
of
it
that.
depends on who you are. Are you upper middle class or upper class, and you have money and investments? And with this inflation, the stock market has done well until the war, and you have more money. But if you're a working class person, you're making around the same. Maybe your raise wasn't 7% last year, and now your money is buying less.
So that 5% raise looks very deceiving when inflation is 7%.
Yeah, my mom, when I was growing up, my mom would always say that, I got my raise and it's not even as much as inflation, so it's not a raise. That's one thing. I remember her saying that when I was a kid. I'm like, what's that? I don't understand what that is.
Like you'll find out one day.
She loves to talk about that kind of stuff. When she was I heard about Social Security for years before she actually could get it.
That's a whole other topic
I know,
in
I know,
itself.
I know.
Way
I know.
into the weeds on that one.
So what is cost pull inflation?
Cost pull is the other mechanism by which inflation happens. What causes it? Basically, cost pull is when a component or a part of a product goes up, and that causes the whole of the product to go up. So, for example, if the price of eggs go up, then you'll see the price of cake go up. What we've seen more commonly is, computer chips. The cost of computer chips is going up, and all the cars have. I think the new the Tesla Model 3 has like 10,000 chips in it, something crazy. So
Yeah, there's a lot.
The cost of computer chips goes up. Now the cost of cars go up. So you're starting to see the economy. I mean, it's like so many links in the chain where you have the price of one thing go up, computer chips, and then the cost of cars go up. Now the cost of transportation goes up, and it's just this very interwoven, complicated puzzle. What we're seeing, especially, I mean, oil prices go up, and the cost of energy goes into almost everything. So the cost of energy, cost of oil goes up, and then that's causing a general rise in all prices. So cost push, oil is probably the biggest cost push. I wish it was just cupcakes and these other whatever sundry items, but it's cars, it's transportation. I mean it's basic necessities. I mean it's it really when it happens like it does. I mean it kind of is like a spiral.
So what about government spending? Does that influence inflation?
I mean, my viewpoint on this is going to probably shock some people. Um, Now, I know everyone wants to say that money printing, having so many dollars being printed, is what's causing inflation. I take the outside view. I don't. I think money printing, what we've been doing, it can definitely cause inflation. I think it's a lot of other factors. I don't think money printing is the main thing causing inflation.
I think it does cause inflation.
It does.
This
No,
is where I guess this is where we differ.
it does cause inflation. People overrate it, and here's why. Look back on history, Japan in the early 2000s, in a couple year period, the Japanese central bank printed most of their currency in circulation. It was something like 78% of their currency was printed in a year or two. They had no inflation.
So where did that money go? Because it didn't go to people.
It goes into bank accounts, like the commercial bank. It goes on bank reserves. So yeah, so much. That's the thing. So much money printed, it doesn't actually end up in the economy. And this is where we're gonna really, kind of do some deep dives. Is there's broad money and there's base money. So broad money is the money that is actually in circulation, but so much money is just on a bank's reserves. It's not actually in circulation.
So it's not in circulation, so people don't physically have more money to spend, and it doesn't drive up prices.
Correct. And here's why I'm.
But it sounds unfair.
It does. And okay,
Like-
this is going to be really interesting. And I think the people at home. So think about it this way. Let's hypothetically. I wish this wasn't hypothetically. They print $20 billion.
Okay.
And they give each of us $10 billion.
Mm-hmm.
So let's imagine that scenario. They print that $10 billion, give each of us $10 billion. Would that cause inflation?
Just the two of us? Just
Okay,
you and me?
Say it's 10 trillion. They give us both $10 trillion, then they print it. Would that cause inflation?
If just you and me, no one
Just
else.
you and me.
Well, we can't possibly spend that much ourselves.
That
That would be my knee-jerk reaction to that question.
Exactly. So they print that money, but if we're not spending it, you can print trillions of dollars. If that money is not actually being spent and going towards goods, so it's really the velocity of money. It's if it's being spent, not if it's being printed.
So, okay, well, yeah, I feel like I'm so cynical. I feel like the system's kind of built up against the average guy.
It totally is. But
So it goes to the people in power, put the money, and it doesn't circulate to like the average person, and it goes to something else, and I don't know. I feel like you need to Robin Hood this situation. Okay, so what was the main reasons for inflation you think last year?
supply chain was the big one. You saw a huge shift in spending, going from services to goods. So folks are stuck at home. They're not traveling. They're not getting their car serviced. Doing whatever. They're buying computers, work from home. They're buying goods off Amazon. So a huge shift. All the money from services was being spent on goods. So that was one thing. Another thing is especially people weren't really spending much money in 2020. So when the economy reopened, there was excess savings that was being spent. So that was a big reason why. And again, the inflation, really, it mostly has to do with supply chain. I would say it's more supply chain than anything that has to do with Federal Reserve money printing. I don't want to discount that because, again,
I feel like they did, though, and maybe that's just like my perception, but I feel like they're like, oh my God, we're going to go into this recession. We have all these people out of work. We've shut down our economy. Let's pump money in. And they overdid it.
They totally did. No, they did. And
they over-adjusted, and that's what caused the inflation. And maybe that's just my perception of what happened.
Right, and I'm not saying money printing doesn't cause inflation, because it does. What I'm saying is you look at examples like Japan or the U.S. after the recession 2008, we printed a lot. We printed trillions of dollars. There was no inflation. So yes, it causes inflation, but I think people miss the mark because there are several other factors that cause it.
Well, like people were getting money they didn't need. Like my sister got so much money on her tax return, and they didn't lose any money. They, it's like because we're upper middle class people, we had jobs that could be done remotely at home.
Right.
No one was out of work, and they took those tax credits and everything, and just spent it.
I'll use myself as an example. I mean, like I was making, a good living, and I was getting the transfer payments, the 1,200. I'm just like, I don't really need this. I mean, this money should go to small business. That's who
Right.
needs it. I mean, really, that was the disappointing thing. So much of this money is going to people who probably don't need it. Like
And
small
those
business needs it.
preparations that were supposed to go to small businesses went to big corporations who then propped up their stocks by buying their own stocks and artificially increasing the value of their stocks. And then everybody that are stakeholders saw the stocks rise and got the dividends from those stocks. And that's how it doesn't help the average guy and the average family. I'm sorry, I guess I'm on my soapbox. I just
No,
want
I
the
mean, it's-
average guy to finally be like, oh, thank God, I've gotten this. And it did save people though.
Well, there's
the unemployment, the extra money
Right.
for the unemployment, like that saved people.
I mean, there were good things about it, but I mean, yeah, unfortunately, there's so much fraud. People take advantage of the system. What was really just horrific was so many of these big corporations. They get these big, they get the PPE loans to keep employees on, and the paycheck protection. They get this loan. The loan's forgiven. They lay people off anyway. So they get government money to not lay people off.
And they lay people off
lay
anyway.
people off, and now they're crying, we're understaffed.
It's like, well, that's what you get for letting people off. That's a
I have no sympathy.
I don't either.
Small business, I have sympathy for. They can't find people. I will say that.
But not all every company operates this way. There's like
Right.
ethical companies out there, but there's also ones that aren't that ethical.
All right, and inflation. We're talking about demand, push, cost pull, looking at the central bank, money printing. It's really, really doing some deep dives on it.
We are, and we've already are completely off the script. But
That's okay.
so I have on here quantitative easing. What is quantitative easing?
Right, so the central bank, I mean, the main actions they take to lower interest rates, stimulate the economy. They lower the interest rate. They buy bonds, which lowers interest rates. Quantitative easing, it's basically like it's like a bond buying on steroids. I mean, they buy just an insane amount of bonds from banks. They print insane a lot of money, to bring interest rates down. I guess when people hear the term money printing, it's a little bit inaccurate. I mean, it's not like they're going in physically printing money and handing it out. What they're doing,
That would be
what they're doing is they're like, they add a bank balance to a computer. So so when they print $1 trillion, they put it into a computer. They buy the bonds from the bank, and then they'll
okay. Hold up.
Yeah.
For the people like me, who is a scientist, and people who are artists and they just want to do their art and they don't understand any of this stuff. What is a bond? This is Finance 101. What is a bond?
So a bond is pretty much a debt instrument. So rather than go to the bank and take out a loan, they'll say, I'm going to sell bonds. So, you sell bonds, or you buy bonds. You're buying a portion of debt. So when I say, that the Federal Reserve, like they're not printing money. They're issuing trillions in bonds, and they're also buying trillions in bonds.
So you buy a bond, and what do you get from that purchase?
So the bond you get, I mean, every interest rate is different. The most typical one are Treasury bonds. That's what that's what the Treasury creates. And there's the 10-year bond, the 30-year. Usually I think the 30-year, it's like a 2.5% interest
Oh my
payment.
God, it's so
So you get 2.5% interest every year. So say it's $50,000. Every year you're getting 2.5%, but then you're also getting the principal back. So after 30 years, you get the 50,000.
Why would anybody do it? Because
it's a safe investment.
okay, but it's like the return is so minuscule.
It's safe, and that's why the return is usually very minuscule on bonds.
This is why crypto is going to revolutionize everything, which we're gonna do a show, but right now there is so much to learn about it. We are actively learning, but you could do a crypto account right now and get 10%.
Yeah, I mean, some of the stable coins like Tether, you can open a deposit account. I mean, yeah, the deposit accounts, checking account, whatever you want to call it, you'll get 10, 15% with stable coins. However, the risk is it's not FDIC backed.
Well,
so if you lose your money, then you lose it.
I'm really not. I don't want it to be regulated. I'm one of those people. But when Biden said that he was going to regulate crypto, I guess the prices temporarily shot up.
I actually take a different approach. I would maybe rather crypto be regulated, because if it's regulated,
It's going to stabilize it.
It gives it more credibility. It's more stable. It's very common in crypto, fraud and just like extortion.
But
I would rather.
It's harder to do that since every transaction is recorded. Like every transaction is recorded on the blockchain.
It's recorded, but it's also anonymous. All right, we gotta get back to talking about inflation.
That's okay. We could talk. It's a conversation. No matter what we do, it's a conversation. But I am so excited about crypto that I'm just going to forego the stock market. I just want to do crypto because I find it so interesting. I feel like it's going to save us all. It's going to save us all. I swear it will.
I mean, I'm optimistic. I'm bullish. I don't know if it'll save us all, but I think they're very good applications, very good things that can be done.
And we'll talk about it. But when you understand, and this is what really got me, like, this is what really got me. When you understand that this is a scientific discovery that people have been trying to solve for a long time, then you're like, oh crap. And we had proof of concept with the war, because people were sending cryptocurrency to Ukraine for supplies. Then people in Russia, whose dollar was going down the tubes, the ruble, they were putting money in cryptocurrency to, conserve their money and save their money.
That sounds like a piece of crap, the ruble.
Oh, it's really sad, because I feel bad for the Russian people because they're not wanting any of this. And then the people that were fleeing Ukraine had money in crypto because it doesn't, it's borderless. It's a borderless currency.
And the country's invaded, they probably can't access their bank account because the bank has probably been blown up. So if it's in crypto, that money you can it's borderless currency. You can kind of take it anywhere.
Right,
so there are huge advantages.
There's huge advantages. So we'll probably do like multiple
we'll do a lot of
shows
videos
about
on
it
that in the future,
because it's so complex and it's so different and it's oh my goodness.
Well, here's what's interesting about crypto, and this is what kind of ties into inflation. Kind of what made crypto take off and give it the credibility it has when the Federal Reserve in 2009 and 10 was printing this insane amount of money, which oddly didn't cause inflation. They're printing all this money. It had a lot of folks worried. That was kind of the start of people looking at cryptocurrencies. And after 2020, same thing. I mean, the government's printing all this money, and people are looking to, a Bitcoin or a crypto that, is not having new units put in circulation, or it has a fixed schedule where, currency's not going to be devalued because it's not having so many trillions of units added.
Well, when inflation goes up 3 times higher than average inflation in a year, it feels unstable.
I will say this about Bitcoin. You look at the price of Bitcoin and crypto. I mean, it's kind of been following the stock market. It's been
Yeah,
going down
it has,
a
the
lot.
S&P 500. That's what I've heard.
Yes.
I think we've covered all of our questions.
Did we? We went through all of them? I think there are a couple more.
Okay,
points to hit on.
so do you think that we're headed for hyperinflation?
No.
Because that's what people worry about.
I'm not worried
the
about
sky is
hyperinflation.
falling.
Hyperinflation is very rare. I mean, it happened in Germany, the Weimar Republic, after World War I. And basically, you see hyperinflation after like a terrible war, after a breakup of currency. Here's why I don't think we're heading to hyperinflation. So we know about economics. The basic premise is supply and demand. So the value of our currency is going down. There's so much supply. That's what is being told. Money printing, too much supply, value goes down. But people forget the demand side. What is the most sought after currency in the entire world? The U.S. dollar. Our current, I mean, if we were any other country, I mean, if, we've seen like, Zimbabwe or Argentina, they print as much money as we do. They do have hyperinflation. We don't have hyperinflation because the way that the international monetary system is set up, the dollar is in such high demand. I mean, countries always want the dollar. I mean, most trading is done in U.S. dollars. To purchase oil from the Middle East, it's the petrodollar. You can only purchase oil with dollars. So every country and every central bank, they have to have dollars. So I'm not worried about hyperinflation because of that demand. What I am worried about is in the future, if the dollar is not the world reserve currency, if it becomes, whatever, the Chinese yuan renminbi becomes another currency, that would be a huge problem. Because the amount of money we're printing and that we have printed, we don't have all this inflation because, there's so much demand for dollars. But if that goes away, if the dollar's not the reserve currency, then I would be concerned.
So that would be a system collapse.
Yes.
Okay. So in every situation, there's an opportunity.
Mm-hmm.
So what opportunities are there right now in the current economic environment?
Yeah, so with inflation, it was the same as in the 70s when there was inflation, when, you see commodity prices going up, be it, oil, copper, lithium. So with, electric vehicles and the fact that we're, as a society, transitioning from internal combustion to electric vehicles, that along with the already, inflation happening, I mean, commodity producers. I wish we would release this video in like December because like the oil companies, ExxonMobil, Shell, I mean their shares have been going through the roof. So I would look at oil producers. Those are stocks to check out. Look at commodity producers; those do really well. When there's inflation, interest rates are going up, so banks do well, and when interest rates are increasing. Stocks that don't do as well when interest rates are going up, we've seen the tech sector, tech stocks, growth stocks have really fallen flat. So good buying opportunities in that sector. That's definitely something to check out. With inflation, money is worth less. If money is worth less, what else is worth less?
What?
Debt is worth less.
Oh, finally a positive.
So companies with a lot of debt, companies with a lot of assets, but also a lot of debt, they do well because their asset prices are going up, their debt prices.
Does that mean my debt is worth less?
Yes, but then the money you pay it off is also worth less. So it's a catch-22. But yeah, that's one reason. By the way, here's a good takeaway. One reason why big companies, corporations, why big governments they like inflation because their debt is easier to service, but then the interest rate goes up, so it also it's harder to take on new debt, but it's easier to pay off old debt with inflation. But so yeah, I would look at those companies with lots of assets, lots of debt on the books, companies that are sensitive to interest rate hikes, like utilities for one, companies that have to put a lot of money into capital expenditures. Those don't do as good with higher interest rates. So that's all something to be very mindful of. So I think I covered banks, commodity companies, oil producers, buying opportunities with the tech sector, with some of the companies that are sensitive to interest rate increases. So yeah, opportunities there, something to definitely be on the lookout for. Keep your radar on.
Well, thank you for letting us know all this because
Absolutely.
I learned a lot.
Mm-hmm.
I still feel that I don't totally understand it, but
well, it's okay. I mean, this one it was. I don't want to throw too much on people's plate. There was a lot covered, but I think that so much of the stuff gets lost in the minutia. Everyone talks about money printing, whatever, the Federal Reserve. It's so much more complicated than that. I mean, you look at. I thought this was interesting. Like, I guess a lot of companies are having higher prices because they're putting so much money and resources into like cleaning and desanitizing, which is a good thing. But
as a biologist, I can
Right.
argue against that.
do we cover what to do about inflation, how to combat it?
Well, that's what we just did. Like, how can you take advantage
Let's
of
take
it?
the advantage, but like, what are the actual measures that can be done?
Like on a government level or a personal level?
We can say both.
Okay.
Well, I guess the main way, raising interest rates. Really, everything to combat inflation is politically unpopular. Raising interest rates, tariffs are actually adding a lot to inflation. We look at housing prices. We have tariffs on Canadian lumber that are adding 25,000. I read Wall Street Journal like 25,000 in the
Why
price
do
of new
we have a
homes.
tariff on lumber?
Those are Trump tariffs.
Why is he hating on Canada?
It was about like trade being unfair with NAFTA. That's a whole other topic. But so yeah, it's everything to do with inflation, politically unpopular. Raise interest rates, cut tariffs, buy more cheap goods overseas. I mean, look, I love manufacturing jobs. We should have more manufacturing. I mean, we should have a more local supply chain. At the same time, I don't want to pay $5,000 for an iPhone.
Well, and we can talk about that in deflation because technology can bring the prices down of those things.
Right, and I was going to mention. I mean, on the long term, I think you look at trends with. We'll talk about this in another video because we've covered so much. You look at trends with technology and demographics. I think deflation is a bigger concern on the horizon, and even Jack Dorsey, CEO of Twitter, Kathy Woods, very prominent people, are saying they think deflation, not inflation, is going to be a trend the next several years.
But I think deflation will help us. And it's going to be hard. It's going to be a hard transition, but ultimately, I think it'll be good for us.
I think it'll be good for a lot of people.
Well, we have like this. I have this old TV that I bought in 2007. That was $1,000. Okay, and now I could replace that TV probably for about $300.
Wow.
A nicer version of that TV. So that's deflation working for us.
But we're seeing that in TVs. We're not seeing it in other sectors. But
Okay. Well, thank you everyone for joining us today, and we'll have another video up next week.
all right, yeah. Thank you guys for tuning in. The Steel Trap Mind Show. Really dense topic. Covered a lot, but hope you got some great takeaways. Thanks for watching. Don't forget to click like and subscribe. Sending off Andrew Carter alongside my awesome girlfriend.
Thanks, guys.